Hello again, everyone. Thank you for tuning in this week and thank you for watching as always. I have statistics from across the country for most places, but first I want to get into real estate cycles and what they are. Just like economic cycles, real estate has cycles too. So I want to talk about them a bit, and I've done a little research, so I want to share that with you. First off, on X this week, I did put it to a poll and I had over 1,000 votes or responses. And the question was, which phase of the real estate cycle are we currently in? Recovery, expansion, hypersupply, or recession? Most people chose recession, next hypersupply, and then recovery and expansion. Of course, we're not in the expansion phase anymore, that's for sure. So before this question can be answered, let's look at the stages of the real estate cycle. Now, there's many charts out there. I'm going to show you a few different ones from different takes from people, but they all seem to be based on the same premise of course, different cycles. Some have 3, some have 4, and some have 5. But here is one of the most prevalent ones, and this is from Mueller Real Estate Finance, 1995. So an older chart, but still very relevant. Phase 1 is the recovery, declining vacancy, no new construction. Of course, we're well past that stage. And you can see the horizontal line across this chart is the long-term occupancy average, and the 2 stages below that line are lower occupancy levels, and then above that are higher occupancy levels. So we're definitely in a higher occupancy level area right now. Next is phase 2, the expansion phase. We have declining vacancy and new construction. Phase 3 is hypersupply, and this is the stage I believe we're in. We're just entering it. Now, when I say just entering, that could mean a year or two. These are long cycles, right? These are real estate cycles. But again, phase 3 is hypersupply. So we have increasing vacancy, which we're starting to see right now. We are seeing increasing vacancy. And of course, we still have new construction. And then we get to phase 4, which is the recession, and we have, again, ever increasing vacancy and more completions as opposed to new construction. All the homes and buildings that have been newly constructed right now are in the construction phases. They are going to be completed then, and of course, we're seeing lots of completions, less starts, but still lots of completions happening. Here is another real estate cycle here. The links are in the description for these cycles also. So I'll start with the green one there, elation, seller's advantage, buyers must be aggressive, exuberance, of course, we all know that from 2021 and 2022, sellers in control, buyers must compete, disbelief, this is probably the stage we're in now on this chart anyway, sellers reluctant, buyers cautious. So I'm seeing a lot of that in the market these days. Despondency, sellers relent, buyers in control. That will be coming in the years ahead. The turn, sellers think twice, buyers losing advantage. So that's the recovery cycle. Next, from Property Geek, this is actually a very good article, and it talks about an economist that did a lot of research here, but let's read what it says. The stages of the 18-year property cycle. The economist Fred Harrison was one of the first people to identify the existence of the property cycle. He traced it back for hundreds of years to conclude that the length of a full cycle averages out to 18 years, with each cycle divided into distinct stages. So he has it broken down into 3 phases over 18 years. And you can see on the y-axis, we have property prices, and on the x-axis, we have time. So in the first 7 years, year 1 to 7, we have the recovery phase. He has a mid-dip cycle in there. Then we have the 7 to 14-year phase, which is the explosive phase, which of course we just went through. And then he has the recession phase from year 14 to 18. So in Canada, our recovery phase would have been from 2010 to 2016, of course, after the last cycle or the last real estate recession or downturn, whatever you want to call it. Then we had the explosive phase from 2016 to 2023 or so, and then the recession phase from 2023 to 2027, which would give us an 18-year cycle ending in 2027 or 2028 sometime then. Now, I've gone one step further and I've added this right onto our national average price points. And you can see 2010 there, starting the recovery phase. We had the mid-dip cycle, then the explosive phase up until 2023, and we are now entering the recession phase. And if you think real estate doesn't go through cycles, you're going to be sadly mistaken, because it does, just like the stock market goes through cycles and the general economy goes through normal cycles. I did make my own real estate cycle chart, so here it is. And this is more along the lines of what happens during these phases as opposed to labeling the phases, although I did use the labels that were given in the first chart we saw. It starts with the increasing demand, then of course the prices go up, and then ultimately the rates have to go up to cool the market. Next, we're into the hypersupply phase of the cycle, and this is where I believe we are now. We're just entering it, give or take 6 months. It's hard to tell, but we will know after the fact. Of course, hindsight is 2020. So as we've seen recently, actually for a couple of years now, supply is increasing. We're seeing it more and more every year. Unemployment has increased since 2023. Prices have decreased generally over time. Seasonally, yes, it's confusing sometimes, but prices have decreased in the last couple of years, and interest rates will ultimately start to come down at some point. And then we will enter the recessionary phase. Of course, delinquencies will peak, supply will be high, interest rates will be down, and prices will be down. And then back to the last part of the cycle, the recovery phase, unemployment will decrease, delinquencies will decrease, and prices will start to trend up again. And then we repeat the cycle over and over again. So that is my take on the real estate cycle. I believe we are in the hypersupply phase or the start of the recession phase, depending on which cycle you're looking at. Let me know in the comments which phase you think we're in and how far into it we are. Okay, moving on to the national stats. Now, I do have most places, but the East Coast, none of the provinces had reported yet, so they're not in here. Saskatchewan's not in here. Winnipeg's never in here. Sorry, guys. You guys, the stats are fragmented and not reported on time, so I've given up on Winnipeg and Manitoba altogether. But regardless, here is most places from the rest of the country. So this is the month-over-month price change from March to April 2024. Berrien District are down 5.8% month over month. Niagara Region down 3.7%. That's obviously where I'm from. Simcoe District down 2.6%. Chilliwack and District down 1.7%. Southern Georgian Bay down 1.5%. Fraser Valley down 1%. Kitchener-Waterloo down 1%. Grey Bruce Owen Sound down 1%, Greater Vancouver down 1%, Victoria down almost 0.5%, Cambridge down 0.4%. Then we get into positive territory. So it's a mixed bag, but there are more in positive territory month over month. Of course, it is still spring in most regions in Canada. London, St. Thomas, they're up just under 1%. Hamilton, Burlington, just under 1%. Montreal, just under 1%. Province of Quebec, just under 1%. Durham region, 1%. Peel, 1%. Lots of 1% around here. Not a lot of aggressive activity for the most part. York region, 1.2%. Calgary, up 2% month over month. Edmonton, up 2.5% month over month. Halton up 3.2%, Windsor Essex up 3.2%, Guelph up 3.3%, Ottawa up 3.4%, Interior BC and the Okanagan up 4.4%, Toronto up 5.8% month over month, big gains in Toronto. Lakelands up 6.9%. Of course, all those waterfront properties are back on the market. The ice has melted, so they usually see some pretty good increases in the springtime. Kingston and area up 6.9%. Brantford up 12.6%. They had a really bad March, so of course April went the opposite way. We usually see a lot of that back and forth month to month right now also. And next up, we have the percent change from the peak. In the 20 to 25% range, we have Cambridge, Durham region, Southern Georgian Bay, Berrien District, Grey Bruce Owen Sound, and London, St. Thomas. And then the list goes on. Kitchener-Waterloo, Guelph, Windsor Essex, Fraser Valley, Peel, all down 18 to 20%. Brantford, Simcoe District, Niagara Region, Hamilton, Burlington, Halton, York, Chilliwack District, down in that 15 to 17% range. Lakelands, Muskoka area, down 12.9%. Victoria down 10%, Kingston down 9.4%, Interior BC and Okanagan down 9%, Toronto only down 7.3%, Ottawa down only 6.9%. I think that's a lot to do with the increase in the public sector jobs. Lots of good paying public sector jobs. So, of course, Ottawa's doing very well. Greater Vancouver down only 1.8%, not far off of their peak. Montreal down 1.3% from the peak. Province of Quebec as a whole just tied their 2022 peak. So they are at peak prices once again, which is very unexpected. Calgary setting another new record. I think this is the third one in a row for this year, up 2% from their all-time peak, which is in March. So, of course, April now is their new all-time peak. And Edmonton is up 2.5% from their all-time high. So Alberta, both major cities, I should say, are setting all-time highs there in April. And looking at the dollar changes from the peak, Durham region still leads the way with the losses. They're down $288,000 from the peak. Cambridge down $260,000. Same with Southern Georgian Bay. Peel region down almost $250,000. Halton down $244,000. Fraser Valley down $240,000 from the peak. York region down $233,000 from the peak. Lots to gain and lots to lose in these regions, obviously. Berrien District down $219,000. Guelph down $209,000. Kitchener-Waterloo down $200,000. London St. Thomas down $171,000. Hamilton Burlington $170,000. Grey Bruce Owen Sound down $167,000. And the list just keeps going on. Lots of places in there with $150,000 losses. Brantford, Niagara Region, Windsor, Essex, Simcoe and District, Lakelands, Chilliwack District, Victoria. Then you get into Toronto, down 91,000. Kingston and area, 69,000. Okanagan, 67,000. Ottawa, down 50,000 or so. Greater Vancouver, only 23,000, which is nothing considering their price points. Montreal, only $8,000 from their all-time high. And of course, province of Quebec is tied for their all-time high, which was in 2022. Edmonton, $10,000 up from their all-time high, and Calgary up $12,000 from their all-time high. Proceed with caution in those places that are at their all-time highs because we are entering the hypersupply and soon-to-be recessionary stages of the real estate market. So again, be careful what you're getting into out there. And last up is the sales to new listings ratio, also known as the market balance. And in buyers markets, we have Southern Georgian Bay, Fraser Valley, Toronto, Lakelands, Berrien District, Interior BC, Okanagan, and Peel region. Lots of places near the buyer's end of it, 40% or so. Greater Vancouver, York, Windsor, Essex, Victoria, Niagara region. Of course, balanced market goes on. The majority of the regions are in that balanced market. And of course, once you get into Montreal and province of Quebec, seeing their all-time highs, or at least the province is, you're in seller's market, and then the overheated seller's market still in Alberta, Edmonton, and Calgary. Now, I'm not an expert on the Alberta market. I just read the statistics every month. But from what I know, there's a lot of investment, a lot of speculation, I'm guessing, a lot of immigration or emigration within Canada going there. So let me know in the comments what you're seeing on the ground out there, if you're a realtor or a buyer or seller. I'm guessing there's lots of competition. But it seems like they're not leading the country when it comes to the market. It seems like they're following the country. So I don't expect it to last out there. Especially their price points now are rivaling a lot of the other smaller cities in Ontario and whatnot. So it'll be interesting to see how things go. But again, I don't see it ending well with levels of debt people have to take on to buy these places. Anyway, that's it for this week. Thanks for watching, and I'll see you next time.